Hello, everyone, and thanks for tuning into the Financial Investor channel. My name is Brent. Today, we're going to be covering an important topic. It's called averaging down. Now, this is really important in dividend stocks, and I'm going to show you why today. We're going to talk about the current shares that I purchased, how much those shares cost, what the total cost was, how we're going to add that to, say, a portfolio, and how that can really help you by averaging down. So the stock that we're going to be taking a look at today is Pivner, and it was a buy for me today. So I did buy a couple shares that I was able to get in at a decent price, and we're going to go ahead and discuss that. So I'm going to pull up the Robinhood app here, and we're going to see that during the day I was watching the stock, and I wish I had bought in at $32, and I think, let's see, what was the low point? $32.82 was the very low point of the day. But I did put in my limit buy for $32.82. After it had happened, I saw that it had hit $32.82. I was like, okay, I saw it right up. I started to go right down, so I put in my limit order, and I thought it may have been filled here, but it only hit $32.86 during this little dip here, and it went back up, and then I saw it trending back down. I was like, okay, I took a look at the last time it had gone down, and I try to say, okay, this one was 82, this one was 86, 87, so I'm going to go slightly above there. I'm going to go 32.88. And what happened was it closed at $32.89. You can see that here that the market closed was $32.89. After hours, it went down 1 penny right here, this little dip right here, to $32.88. And that's when my limit buy procced for $32.88. So I bought 7 shares. I bought 7 shares, and I bought them for $32.88, 32.88. And the total cost for all of this was, let's go ahead and do the total cost here. It was right here at the bottom, $230.16. So $230.16. I figured I could average down. Now, why is averaging down important, and why did I do it? So let's go ahead and take what the current information is here that we have, and I'm going to paste it right here. So this is what the current one is, and I'm going to begin to change my numbers up top, and this is going to be reflected on my yield, my annual income, my monthly income, and the change and the buy price. So this is going to be set as, used as an example. This is what it was before. Now let's go ahead and begin adding the shares that we bought in today. So 104 plus 7 is 111 shares. So automatically that changed a couple of my other things. Next piece we have to change is my buy cost. So I take my original buy cost here, and I'm going to go ahead and say 3479.13 plus $230.16. So my new buy cost is $3,709.29. Now, main things to note are the buy price decreased, it averaged down by 3 cents. So now my buy price averaged down by 3 cents. You can see that my money changed, the dollar amount changed now is actually positive 0.07 cents. So I'm actually only down by buying a couple, 7 shares. I managed to decrease my loss by 0.07. Now some of the big changes are over here on the right hand side. You can see that my previous annual income was $133.12. It's now $142.08. That is almost a $10 difference. So I put only $230 into this stock to average it down, and I'm going to be making an extra $10 a year in annual income off dividend pay. My monthly income increased by a little over $2 and some change. So about $2 and what appears to be around 30 cents. So $2.30 every quarter payout is a nice increase. So $2 and say 50 cents per monthly quarter, and an annual increase of about $10 just off averaging down. So that is why it is important to average down. So if you see that your stocks that you currently bought in at are under what your initial buy price was, and you still believe in the stock, that's the main important thing. You still believe in the stock that you're invested in. If you took the time to research the stock and you chose it to add to your portfolio, you should know that it is going to, have a good future. You should believe in it. So this is one of them that I believe in for the future, and I averaged it down. So that decreased my buy price, increased my annual income, increased my monthly, quarterly payouts, and decreased my net loss. So that is it for this video. I hope that was really useful for you guys out there that are dividend investors or just investors in general. Averaging down, even if you aren't a dividend investor, averaging down on loss decreases your net loss overall. So that is something to note for, say, if you're a growth investor and you average down on losses, it also decreases your net loss. Eventually, when these stocks pick back up, I now own 111 stocks, and if they jump over the net loss, that's actually a bigger gain in the end. So that is it for this video. I hope that everyone out there learned something new today. If you didn't, that's great that you checked out my video, but I think it was something that's not really talked about too often out there, is why it's important to average down. So I want to thank everyone for watching up until this point, and if you liked the video, hit that like button, and please remember to subscribe by hitting the button on the right hand side underneath the video. My resources page has many free stock tools to get information and screen for stocks, so check that out on my website. The link is in the description below, and also on the left hand side of the screen at the end of the video. If you have any questions or want to say hello, please leave a comment and I will always reply. Thanks for tuning in, and I will see you next time. Bye.